Eric Muathe with Muathe.com with world market analysis for the weekend of December 3rd and December 4th, 2016. Let's take a look at markets here. We see that for the most part we have down markets at the close of the week, or as far as markets were concerned on Friday. So down pretty much in Asian markets there. Take a look at European markets at the close of Friday's session, and we can see slightly down day on Friday. And we can see here towards the end of the day, the Brazilian market is up about 1%. The Canadian market slightly to the upside. S&P 500 with about 30 minutes to go is unchanged. Let's take a look at those charts. Let's begin by taking a look at the Australian market, and we can see this one's hard to read. In fact, if you take the monthly closing highs and connect them, so you're talking about monthly closing high there and this monthly closing high, you draw a line, you can see the market is coming back to test this top side price channel. And also if you take the monthly closing low and this monthly closing low, draw a line, there is a wedge formation here. So I think markets are stuck in this range. It's hard for me to read which way this market wants to lean, but for now we see that there's good support on the RSI 50 level on the monthly. That enough is good enough to stop the recent slide, but net we seem to be stuck in this huge wedge on a month to month or multi-month time frame, and until we can move above or below this wedge, we seem to be stuck in a sideways market. Take a look at the Chinese market. Ever since it moved up this weekly closing high here, which was at 3008, 108.10, market's been trending higher, and we've been talking about the bullish crossover here between the 13-week moving average and the 34-week moving average, which was suggesting just to expect a grind to the upside. That continues to be the case. Similarly, if you take a look at the Japanese market, we see also that ever since it jumped above this recent closing high on a weekly basis, we've had a nice move to the upside over the past 2-3 weeks. So since that breakout, which also corresponded with a nice crossover here between the 13-week moving average moving above the 34-week moving average, this market has also been net positive. Now the last time we had a crossover as far as the Japanese market is concerned was during this period here between the 13-week moving average undercutting above or moving above the 34-week moving average. We ended up having this nice uptick in the subsequent months. So here it favors continued movement, not necessarily week to week, but as long as the market can hold above this crossover level, it should have some momentum to the upside. Now we also discussed potential for resistance on a weekly chart. We go back to the break. Let's just call that break there, for example. We broke down here, which was off the highs there. We draw a line, which should be something like around there. You can actually see what happened is we come back and tag this same line, double top rejection there, which is the highs here and here. The market drifts lower since, and we are coming back to test this. So week to week, the RSI could pose some type of resistance, especially if we confirm resistance here. That might suggest that after a nice couple of weeks to the upside, it might be looking that now the next swing trade could be to the downside. Let's take a look here at the Nifty. And on the 3-year time frame here, it seems that all is lost here ever since the failed breakout. So there was this failed breakout here. We were calling for a pullback after that failed breakout, and we've gradually over time drifted lower. Now it might seem that one needs to expect lower prices, especially given that we have this potential for a bearish crossover between the 13-week moving average and the 34-week moving average. The last time we had that crossover to the downside was here, and the market did actually drift lower. So the risk is still there for downside action, but I think you have to be very careful in assuming that the Nifty has only one option, which is to go down. I'll show you why it could bounce. Take a look at the previous highs. If you take a look at this line here, which was breakout, so we can see that once the market moved above the blue line here, we had this nice uptick here, and the market would subsequently go higher. So we see that we can extend the blue line, and right now the market is coming back to test that blue line. If it can hold, then this is where you can expect the recent slide to stop. So that's one layer of potential support. There's also another way of looking at this, which is off the movement here. Now that movement in the RSI coincides with a period where the stock comes off the lows here. So we draw a line from there, and every time or anytime we find uniform activity bounce on this line here, we can expect this to be a good place to consider a bounce to take place. So if the market can show support on this green line on the RSI week to week, I would speculate that this is where you start seeing possibility of markets moving to the upside. So it would not surprise me that after this recent slide, that now we are looking at the potential for support. And again, two lines. Line number one is here, if the market can hold above this green line, and line number two is the previous RSI highs line that is now being back tested. If both lines can show support here on the RSI, expect the next swing trade to be to the upside. And at the same time, if we break below those two lines, then that's a fresh sell signal. If we take a look at the Bank Nifty, we also see that it is still holding a level that I suspect it could find support. Go back to the lows here. This RSI movement brought the stock off the lows. We draw a line from there, and so far this line is holding. As you can see, it continues to hold this range, and I think this is good enough eventually to actually give it a reason to bounce. So as long as it's holding above the green line on the RSI here, expect there to be a bounce in the works. Keep in mind, if you take a look at the hourly chart, we see that over the last couple of days or so, we've been making lower price lows on the hourly. So you can see prices here making lower lows, but the RSI has been showing an improvement. That by itself is good enough to set the stage after that positive divergence, set the stage for some type of a recovery run here. So it would appear to me that one can make some expectation here that the next swing trade for the Bank Nifty more than likely is to the upside. The one thing I'd like to point out here is on the monthly, there is also hidden risk here, because if the market drifts below and moves below RSI 50 for the month, that would be a net bearish month. Just like the last time we dropped below that 50 level during this period here, is when we had this RSI moving below 50 for these 2 down months. So the risk is, if the Nifty drops below 50, expect there to be much lower prices whenever it moves below the RSI 50 level on the monthly. Take a look at the South African market, which is showing a bearish crossover here between the 13-week moving average and the 34-week moving average. So that's one red flag, or at least showing signs of increased momentum to the downside. And we can also see that recently it's moved below this 1602 level. So at 1602.79, which is this weekly closing low there, market is below that level this past week. So as long as it's below 1602.7, one can expect lower prices. Now at the same time, if you take a look at the previous long-term monthly chart we had looked at a couple of weeks ago, we can see that pretty much what we are coming to do here on the weekly RSI is test this line here coming off the lows of late 2008. Once the market moved above this level here, we made important lows. In late 2008 for that South African market, we draw a line from here. And every time we bounce on this line with uniform action, with the RSI showing uniform action, it tends to be for a good support. Just like this double bottom here, which is this period here, the market has bounced nicely here in 2016. We are coming back to test the same green line. We can say here that if it can find support week to week on this green line, that would be a positive for the market and a potential for a bounce. Otherwise, if we trade below that for the first time since 2008, this is going to be suggesting a fresh sell signal. So either we find support and a bounce, or we break below the green line and we continue drifting much lower. If you take a look at the French market, we continue to see this sideways action. In fact, we've been trading in this range for quite a while, and we continue trading within that box. So we haven't decided how we are going to get out, either to move to the upside or to break down. So that continues to be a sideways market in my opinion. And the same thing can also be said about the DAX. The German market also been trading within this box over the last couple of months. So until we can either break out for a move to the upside, or maybe even break down to begin a move to the downside, as long as we are stuck within this box right now, we have to assume that this market continues to be sideways. If we take a look at the FTSE, we can see right now it's coming back to test the recent weekly closing lows right here. And so we need to watch that. So watch for movement below 6693. That would be bearish. If the market can hold above this level, that's good. Also, we are coming back to test this RSI 50 on the weekly. If we can bounce back above 50 on this line, that would be net positive. The last couple of times we've tried to move below 50, the market has responded well. Most recently, you can see here that we went below 50 and back above it for this re-entry, which was successful. So if the market can bounce back above the 50 level, that would be good. There's also a line connecting RSI lows. This line needs to hold. So let's take all that stuff out. So this line connecting recent RSI lows can also be a bounce or support line for a bounce. So something like a bounce here will be bullish for price action. And we need to watch that very well defined line, because if we break below the line, break below RSI 50, break below that 6693 level, that would be a sell signal. So those are the levels to watch as we go into the next trading week. If we take a look at the Canadian market, I personally think that if it struggles around where it is trading right now, in other words, if we cannot make higher weekly closing highs here, given that the market did show an improvement in price, weekly closing highs, but we are coming back to test this line here, which has been a problem. That line has been recent negative divergence, in that we saw an improvement in price highs, but the technicals so far have failed. I think that sets the stage for a pullback week to week. More so if the market is negative for the month, you can see that it would be stalling here on this RSI level. The last time we broke below that level, last time we broke below here, so this breakdown saw the market drift lower. We would be coming back again to test it here this month. If we fail to hold above this RSI level on the monthly, it might be suggesting that month to month the equation is shifting, and that now this looks more like a bearish look. In fact, if you go back and take a look at the most recent major bear markets, as far as the Canadian market is concerned, they've all began with the RSI resistance on this current level. So let's test that. For example, you see the break here in 2000 before this bear market move. You got a break here, this break below the line, and failure to move above that break line was for the highs there. We went into a major bear market drop. Uniform activity rejection above the line and back below it for this sell signal and a bear market here. And you can see late 2016 we are coming here and we seem to be showing early signs of resistance. So if the Canadian market is negative for the month, that confirms that this is where it is stalling and that this is a problem. The last time we stalled here was actually for the highs right there before this drop. So we need to watch here. Bulls want to see the market reclaim the level above the red line. Otherwise, if they cannot move the market above this line and we see resistance, chances are more than likely the next major swing trade here continues to be down. But the key is if markets are positive for the month or negative for the month. If the markets are negative for the month, net we are looking at market. Let's take a look at the Brazilian market, and here we can see that this past week it broke below recent weekly closing lows. That's a net bearish look. And so as long as the EWZ, the ETF that tracks the Brazilian market, is down below 32.50, that remains a market that could still see lower prices. If it can reclaim the level back above 32.50, then we can say that it has repaired the damage on its chart. Also, let's watch this level here, because we were expecting support on this line here, and we can see that this past week the market seems to be breaking this trend line. Also, we are seeing it push below RSI 50. As long as the price is breaking down, price breakdown here, RSI failing to hold above 50, and also breaking the blue trend line, this might suggest that net week to week, this continues to be a market that could easily probe lower prices. Don't forget, if you go to the long-term picture, the risk for the month of November, very early in November, but we are seeing that the RSI is moving below 50. As long as the RSI is below 50 for the month, expect a big net downward movement. So this is a big deal. Below 50 on the RSI for the month might suggest a big down month. And if you take a look also, don't forget that from a long-term perspective, we've been expecting lower prices as far as the Brazilian market is concerned. Here, ever since we broke below here in 2011, we've been coming back and tagging this line. And you can see that this has been an easy way of determining which way to play the market. Well, I wouldn't say easy, but we saw uniform activity rejection here for the highs. We saw this happen about 2-3 months ago. We were expecting lower prices after that resistance, confirmed by this RSI resistance. Of course, since then markets are lower. So net, the big picture doesn't look that great. And again, the key is what markets are doing on RSI. On the 50 level, below 50 for the month of December, expect a big down month. If the markets can reclaim back above 50, then maybe there's the chance of recovery. Keep in mind on the daily doesn't look that bad, because if you take a look at where it began, the movement off the lows. So this movement off the lows, see here, brought the market off the lows here. So we draw a line from there. And as you can see right now, we are still holding above that green line. So as long as markets are bouncing where they need to bounce and showing support like they did here and now here, as long as market is bouncing on this green line, we can expect there to be a meaningful bounce. So if this holds, expect there to be a bounce. Keep in mind that we are also combining this with lower day-to-day prices, RSI also showing an improvement. That positive divergence does set the stage for possibility of markets moving to the upside, unless what we see here is we break below the green line, and more so if the RSI does not recover back above RSI 50. So for the month, if the Brazilian market is below 50 on its monthly RSI, you have to remain bearish. Eric Muathe with Muathe.com. Otherwise, be on the lookout for subscribers for part 2 of this weekend's market analysis video, where we look at commodities as we always do, and also some ideas to play in part 2 for subscribers. We should be out sometime on Sunday. Eric Muathe with Muathe.com. Enjoy the rest of your weekend. Peace and blessings. ESSEC.